Hi and welcome everyone for the next presentation of today's seminar. My name is Daniel Torsson, Equity Research Analyst at ABG, covering the IT and tech space. And the next presentation is with Proact and the CEO, Jonas Hasselberg. So go ahead, Jonas, welcome.
Thank you very much. Thanks for having me. And thanks everyone for listening. I'll spend a couple of minutes here just going through who is Proact and what we do and how are we doing. And then hopefully you'll get a good picture of us as a company. So starting here, just a basic introduction. We've been around for about 27 years. We're a Swedish IT company, of course. We're based out of Stockholm, but we have presence in about 13 countries across Europe. We deliver business value to our customers, and I'll go a little bit deeper into that here in a second. We serve primarily mid and large size enterprises across Europe. We have about 4,000 customers that we serve on a regular basis. Our turnover is just above 400 million euros. And with our last acquisition here few months ago, we're about 1,100 employees across the countries here, as you can see. But I want to take a step back and just talk a little bit about the trends in the market and what's driving, in particular, our customers. And there are three main trends. Most of our customers, if not all, are going through some sort of digital transformation. They're trying to improve their business in, can be a number of ways. They want to deliver a better customer experience, or they want to make better decisions by analyzing data, or they may want to automate production or processes, whatever it may be. And all of this they're trying to enable through IT. And this is becoming, of course, a very important business driver for our customer and therefore for us. So that's one of the key trends that we're building our strategy and our future on. The other strategy is what we call multi-cloud, which is more of a technology trend. And it's all about how technology is being used and how IT in particular is being architected to enable the transformation customers are driving for. And it's about cloud technologies, so scalable, agile, fast deployed technologies, but in a number of different ways. It could be what most people refer to as the public clouds, or the Microsoft and the Googles of the world, but it may also be cloud technologies that the customers deploy in their own data centers, or if they let Proact run it for them. And our strong view is that the world is not becoming easier necessarily for our customers from a pure technology perspective. Development is moving very, very quickly. Technology is evolving fast. Skilled resources are difficult to find, and our customers are typically more and more dependent on partners like ourselves to enable their transformation. And then the third trend, and maybe the most tricky one, or if I may say so sad one, is cyber threats. So the need for our customers to protect their data in particular and their IT infrastructure in general from attacks. So cybersecurity and cyber protection is the third very important trend. And all of these three are very much driving our strategy going forward. So what we do, we're a specialist. We're very niched, if you will, in our value proposition. We are all focused on delivering value to our customers through their data. We think data is the new gold for our customers. This is where a lot of their intelligence and potential lies. So we want to help our customers from everything to create a strategy around how they manage and store and protect their data, to the actual physical storage of the data. And obviously we talk about large amounts of data here from large enterprises, connecting to the data. So the data may be distributed across many different sites or maybe different data centers. And we want people from a number of different locations to get access to it, from laptops, mobiles, whatever. Security and protection, of course, not only against cyber threats, but backup, recovery capabilities to know that the data integrity is always there. And then last but definitely not least, then getting the actual value out of the data, which could then be analytics, automation, artificial intelligence. So these are kind of the value propositions we want to help our customers with. We have four main revenue streams or service lines. Consulting, so we provide help with our customers, everything from data strategies, technology architecting, technology implementation, operations, training, classic consulting offerings to our customers. So that's number one. Number two, managed services. So we run IT infrastructure on behalf of our customers. So IT as a service, if you will, and these are then what we call cloud services or managed cloud services. Third, hardware and software. So this is a reselling business, typically vendors, pretty known vendors like Dell and NetApp and Cisco, in terms of reselling and implementing large implementations for their infrastructure. And then last and definitely not least, support. So making sure that our customers' IT is up and running and is always up to date. So 4 main revenue streams that are underpinning our business. Obviously, the actual products we're offering are quite a wide range. We always put our customers at the forefront and center of our portfolio here. And then in this wheel, you recognize then the five value propositions. And a range of products ranging from storage solutions, networking solutions, disaster recovery, cybersecurity, cyber monitoring solutions, artificial intelligence platforms. So quite a breadth of products and services to cover all these areas. And one thing that we get a lot of questions around, well, is how do we play in the context of what we call then the public cloud or the hyperscalers, which is another term. So the Microsofts of the world with their deployment. And our position there is we play very well together with them. They provide another technology platform that we can work with and develop services on top. So when we engage with our customers in this multi-cloud discussion, we have a lot of discussions around when do you use Microsoft and what are they best for, or the Google or the Amazon. When do you let Proact run some of your infrastructure, and what things are most critical for you as a customer to manage yourselves? Data is obviously mission critical. A lot of our customers do not want the data to leave country borders or maybe not even leave their own premises. So that's a very good topic to discuss with customer in terms of when do you let it flow over country borders? When do you let somebody like Microsoft or Google to store it for you? And when it's more crucial and critical for you as customer to manage it yourself. So we support all of these deployment models and are pretty transparent to what the customer feel is best for them. Wanted to highlight 2 customer cases that are, we think, pretty descriptive. There's a Swedish customer called Knox. They are a forward leading and leaning software as a service company based out of Sweden. They deliver effectively ERP or ERP software to mid-sized companies, and they develop their own mission-critical platform. So they run the software on their platforms on behalf of their customers, and Proact is delivering a range of both in-house platforms that Knox is managing themselves. They run it across a redundant set of data centers that are geographically distributed. We manage the network connectivity between the data centers for them, and we provide some of our services to secure the data in terms of backup and disaster recovery. So it's kind of a very typical customer for Proact in the sense that they engage with us on our complete set of product lines, so consulting, managed services, system sales, and technical support. So a very, very typical and very good customer on our behalf. Another case I wanted to highlight, which is a little bit more recent, is a Swedish insurance company called ABFA or AFA. They are also a customer of a company that we acquired here in the spring called Knox. So together we are delivering a new application development platform for the customer. So they want to get their time down for developing new applications and updating their applications from usually what took them months down to hours or a few days. And we're doing this by delivering a complete new modern cloud-native development platform that enables them to be much, much quicker in how they iterate and develop their software. So another good example of how the technology we provide and the platforms we provide helps our customer gain some very clear business value for them. Strategy-wise, from a numbers perspective, we've been pretty clear that we want to continue to grow our business. We have an ambition to grow at least 10% per year over the period of time, or on average, I should say, 10% per year. We do aspire to grow our profit margin, measured as EBITDA, from today's roughly 6% to 8%. And then we want to move our revenue mix to services as much as we can. We're currently running about 60% resell, 40% services. And we think we can be at 50-50 in the near future. And this helps us give a little bit more predictive revenue stream, better profit margins, but more importantly, a better value and better relationship with our customers. Strategy-wise, we accelerate our strategy very much through acquisitions. We've done 4 acquisitions here in the last 2 years, so we try to be at a pace of about 2 per year. 2 years ago, we did an acquisition in the Netherlands of a company called Peopleware. They are very strong and very skilled in running end-to-end infrastructure or IT environments on behalf of their customers on top of Microsoft technologies, both on the workspace but also on the infrastructure side. They brought about almost 30 million euros into our business and almost 220 very skilled specialists and technology-savvy engineers into our organization. They are now fully integrated into Proact in the Netherlands. We're operating in one team towards our customer with a combined portfolio and under the same brand. And then about a year later, in October of last year, we acquired a company in Manchester, UK, called Cetus, very good in hybrid cloud solutions, so very technology focused on helping customers with that hybrid or multi-cloud environment that we talked about 13 million British pounds, 50 employees, also now almost fully integrated and operating, at least within soon, under the Proact brand in the UK market. And then here in Stockholm, in April of this year, a smaller company called Konoa, that are probably among the best in the region, if not the best in Europe, on cloud-native development platforms, super skilled consultants. And then last and only recently, a rather big company in Germany called AHD. Very good in running managed cloud services, complementing us very well also regionally in Germany. So they have a strong foothold in the Düsseldorf area, which is an important business region, of course, in Germany. So 4 very good acquisitions that are both giving us market share and new customers, but obviously complementing us as well with regards to the expertise and the portfolio. A little bit maybe now outdated in terms of numbers from our last quarterly report, the Q3 report in end of October. Good growth on the services side, positive development on our profit and gross margins. TCV is a terminology we use to describe the sales or the bookings, if you will, of cloud services. TCV stands for total contract value, so it's the value of the contract over its committed length. Could be 3 years, could be even over 5 years in some cases, and a good growth also in the bookings of new managed cloud services in the quarter. A little bit of a revenue decline, and we spoke a lot about it at the time of the release of the report. Definitely some negative impact from the pandemic still in terms of engaging with customers and customers being willing or able to make investment decisions. Also seeing a little bit of impact from the semiconductor shortages, which is very general and broad in the marketplace. And obviously also looking forward, the COVID uncertainties, of course, remain, and we continue to see that also in the marketplace currently. So if I summarize, I think we are very clear in our position, and our position we think is very strong with regards to where our customers are going with their digital transformation journeys and their ambition to drive business value out of IT. We are specialists. We are focusing, helping our customers get value out of their data and out of their information. We're looking very positively at the investment trends over the next couple of years. We think the market is growing anywhere between, well, in the traditional business, we're in a couple of % per year, but more importantly, in the services part of the business, probably at least 10% per year. So we're playing in a good growth part of the IT industry. And obviously, we're executing that growth strategy, both with the the strategy in terms of broadening our portfolio and how we execute our strategy, but also, as we spoke about, the acquisitions that are complementing us from both the growth but also the portfolio. So that, I think, is a summary of Proact. Thank you very much.
Excellent. Thank you very much, Jonas. I have a couple of questions to follow up with.
Shoot.
First one, you covered the global component shortages and the freight rates. How has it affected you in the last year? And have you seen unmet demand, so that you have demand from customers but you can't really deliver? Or how does it really affect you?
Yeah, I think we've been relatively spared from it. I think there's been other parts of the IT stream that's been more impacted, of course. We've all read about it in the news, and car industry being one example only in terms of having had challenges from a semiconductor. But yes, we are seeing certain vendors, certain products being impacted, and we haven't seen it yet improve.
Okay.
If anything, it's probably more challenging now as we get towards the end of the year. So it remains a bit of a challenge. We've been relatively spared, but it is becoming a worry for our customers. A lot of our customers, of course, running their projects. They want to deliver on some of their IT investments, and the fact that uncertainty around deliveries are out there in the marketplace creates uncertainty and worry with our customers. So it's still there, and unfortunately has not been better towards the end of this year, but if anything, a little bit worse.
Okay, and difficult to say when it's going to resolve, I guess. What do you think?
I mean,
First half of 22 will be affected, obviously.
I think so. I mean, we don't have any insights more than anybody else, but if you see what the big companies in terms of vendors and semiconductor producers and the big automotive manufacturer are predicting, it'll hopefully ease off during the first half of the year and be better by mid next year.
I see. My second question was on the market growth, and you touched upon that. Low single digit on the traditional IT services and hardware, and then more than 10% on the cloud-related ones.
Yep.
We haven't really seen that in the last couple of years for Proact. When should we start to see that again, and what is the main driver on delivering on that?
Yeah. No, so there's growth in the marketplace in general, and particularly if we look forward, I think you're absolutely right. There's been a couple of years of turbulence, if I may say so, the last two, because of the pandemic, which has impacted IT investments. And I get every now and then the question whether we've been impacted in a net positive or net negative way from the pandemic. And I'd say probably net negative, but not terribly bad. There are definitely industries that have had a tougher time. A lot of our customers had to shift their focus on enabling remote workforce, a lot of investment in laptops, remote access, just helping their end users be productive when working from home, and less maybe a little bit on IT investments. So that's been one shift, if you will, during the pandemic. And the other piece is that as we push a lot of our growth and a lot of our strategy on delivering IT as a service with 3 to 5 year commitments from our customers, they've been definitely more reluctant to engage in long-term contracts during the pandemic.
Okay.
So our view is that we've seen it already, and hopefully if the pandemic now goes away, we think the growth opportunities are there. The market is definitely there. It's just about getting access to customers and letting customers have time to make decisions on the more long-term thing and not the short-term reactions.
So a little bit late cycle affected, it sounds like. It will come a little bit later for you, for example. Yeah,
I think as soon as we can engage with customer on a normal basis and they can start investing in their long-term strategies and not short-term, adapting to the pandemic, we'll see growth.
Yeah. My next question was on the customer types. Public customers, private customers. Do you see any changes or differences between those in how they have reacted in the pandemic, but also on the cloud and system sales in general?
Yeah, I think if you start at the end of your question, I think public customers are a little bit more careful. And I don't think they're careful because they don't believe in the technology, but back to where our core is and our strength is about managing data. And obviously public sector has a little bit stricter requirements and regulatory issues to take care of when it comes to storing data, and therefore a little bit more concerned with not storing it on premise in their own control. So we've definitely seen a little bit of hesitation to move to the cloud and finding ways to do that in a way that's regulatory okay. On the more commercial side and the private sectors, we, in general, I think see smaller companies being a little bit quicker because their IT environment may be slightly less complex, whereas big customers are either having complex environment or may actually find that running their own IT infrastructure still better from a performance and price perspective. And this is one of the reasons why we don't see the world going all the way over to the public cloud, but we will live in a mixed world for as long as we can see.
Yeah. How important are the most recent acquisitions for you to drive organic growth ahead? Will they contribute, or will they enable you to cross-sell any products or services? Or how should we think about them strategically?
They are both, of course, helping us grow organically. I mean, we're buying companies that have a healthy business, that they are profitable, they have a sustainable, strong, established business. So we're pretty picky on our acquisitions. We want them to be well-functioning companies on their own right. But yes, we're getting a couple of benefits of them. One is cross-sell, upsell. So typically they have a slightly different portfolio than we have, or sometimes very different portfolio than we have. And together we can then bring a broader set of products and services to our customers. I think Knox here in Stockholm is a perfect example. They are really good in helping customers deploy then what we call cloud-native application development platforms. We have the skills to make that operational and run it as a service. So together we can also not only do cross-sell, but actually develop new products and services together. So both organic growth from their core business, but definitely synergies in terms of having a better offering when we go together to our customers.
And how important is size for you? You are pretty big in the Nordics. You have a decent size in UK and Germany.
Yep.
Do you feel like you have reached a sufficient size to reach your margin target, or do you need to be a bigger company to reach that?
I think scale definitely helps, and we will continue to grow because we think it's important and will help us drive scale, and it will be one of the drivers, if you will, to go from our current roughly 6% EBITDA to 8%. And the other piece is just being even better in actually doing the service delivery. So professionalizing the way we deliver services, which will both, maybe most importantly, deliver a better customer experience, but also help us do it more automated and using tooling in a better way to get efficiency. So I think size is important from both of those perspectives.
And when you look at acquisitions ahead, are you looking for service-related companies to drive your system service mix towards the 50-50? Is that very important for you when you look at it?
It is, both because it's a quick way for us to bring skills in. It is a bit of a chase for really good and clever people out there, and acquisition is, of course, a quick way to get a lot of skills in, and is pushing us much quicker into the strategic direction of improving our services mix. So acquisitions you will see going forward will have probably a higher degree, or should have a higher degree of services revenue than we do ourselves on average.
And then my final question is on cloud solutions here. Which is the perfect client? You mentioned Knox case example here, but which is the perfect client or end sector that would like to have a hybrid cloud? Parts of the data in the public cloud and parts in the private, where you really can add value. Which sectors has the highest demand for that?
No, I don't think there is a particular sector, but we do see that customers with, let's say, either complex IT so Knox, I think, is a great example. It's not a huge company, but obviously they are software as a service company, so their IT is mission critical, and so that's a very good example. And here, like we spoke when I presented that case, they buy everything we have, right? They are running some of the IT in their own premises because they want to be in control of their platforms. They let us run some of the services like networking and backup because we're experts in it, so we can do it as better than anybody. And they're using the public cloud for certain things because it gives them some agility or innovation and productivity for that matter. So I think those are very representative. And frankly, I think a lot of our customers will go in that direction.
And to follow up that case example then, is the profitability for you, I guess it's higher than your normal group levels for such a contract where you do everything? And do you have a scalable delivery so that you don't need to move 3, 4, 5 people to Växjö and their head office actually? Can you do it remotely?
We have a pretty scalable delivery, and we're running our delivery out of 4 what we call delivery hubs across Europe, and they're serving all our 13 markets. And that is one way for us to kind of find that perfect balance between scale and delivery, but also being close to the customer at the same time, because it's super important for us that we're really close, and we should feel the same heat our customers do when things aren't working, and obviously we should be able to celebrate when it is working with the customer. So We're running delivery out of 4 hubs. They're managed jointly, so we're standardizing the way we do things. We're doing continuous improvements and development in the same way across the hubs. So we get scale without being too far away from our customers.
Yeah. I think that's a good end note. That was the 25 minutes with Jonas and Proact. And thank you everyone for listening in, and thank you Jonas for joining the seminar.
Yeah, okay, thanks.
And
for having me, and thanks for listening.
And we have the next presentation in 5 minutes.
Thanks.
Thank you very much. Bye.